Trades with me, Ankur Mishra, and Ankita Saxena will give you a full roundup of what happened in the market today. And Ankita, today it was day of red, although there was a clear-cut fight since morning between bulls and bears, but finally, even in the last hour, the red color stays.
Absolutely, Ankur. In fact, the correction continues. A lot of analysts have been talking about this time-wise correction because of the rally that we saw coming. This correction was largely penciled in, but we have managed to go sub 25, 450 levels today. 25, 443 is where Nifty shut shop today. Nifty Bank also, though, managed to recover from the day's lowest point, but nonetheless, that traded with cuts of 484 points on Nifty Bank as well. Broader markets also, we did see a bit of a recovery coming in a Nifty mid-cap space. It was in the red with cuts of 0.1%, but it managed to recover from the day's lowest point. As you can see, there was a recovery that happened on mid-cap space. The small caps, however, traded with cuts of 0.4%. That was underperforming the benchmark indices, even though small caps also managed to recover from the day's lowest point. So broader markets also seeing a sea of red there. And as far as sectors are concerned, a bit of sectoral churn that we are noticing in Nifty metals have been doing well for the last two sessions, and Nifty Metal continue their outperformance with gains of 1.4%. Tata Steel sale, JSW Steel had a brokerage note come out today on it. Wellcop, Jindal Steel, they were all trading with gains of 2.5+%. Nifty Pharma also in good stead today with gains of 0.3% coming in. Nifty Auto also doing well. Nifty IT was in focus, since morning. We had a note come out where JP Morgan had upgraded the target price for a lot of IT counters, and on the back of that, IT was in focus, but it gave up those morning gains. As you can see on the chart, it gave up all those morning gains, but nonetheless managed to shut shop in the green today. Besides that, market breadth was largely tilted in the favor of declines, and Sensex also lost almost 287 points, ended the day with cuts. Now, like I mentioned, as far as the top Nifty gainers are concerned, we had Tata Steel, Steel Pack was in focus, was the highlight. Tata Steel, JSW Steel were the top Nifty gainers. Asian Paints was also one counter that was in focus on the back of the CCI probe. It managed to recoup all its losses since morning and ended the day 2% higher in the trading session. We also had Maruti in focus on the back of auto sales numbers. Trent and Ultratech Cement also did well in trading session today, but largely a quiet, somber day coming in, Ankur, on the D Street.
Yes, quite a somber day, but in the last hour, there was some kind of attempt by the bulls to make up for the losses for the day, but however, that attempt failed as Nifty has ended below 25,450 mark. But we have with us Amar Singh, Senior Vice President Research, Angel One. Amar, welcome to ET Now. My first question is regarding the mark, 25,400 well defended today. Do you think that we are still up for a rally in coming days and even before the July 9 deadline?
A very good afternoon, and thank you for having me on the show. So basically what we are seeing is some sort of consolidation and profit booking, which I would say is definitely a good sign, because earlier, if we look at breaching the 25,000 itself was a tough task. And now what we've seen is that Nifty has breached the 25,000, is trading close to 25,400. So some correction or some profit booking is happening. But overall, what we are seeing is still the overall advanced decline ratio, or the rally across sectors or across segments, that's still there. So I would say that the trend definitely is in favor of the bulls. That's what we've been saying. And any pullback is a buying opportunity as far as Nifty is concerned. Nifty's got very strong support coming around the 25,300, 400 zone. That's a very strong short-term support zone. Whereas on the upside, we have resistance around the 25,600, 650 zone. We also have the weekly expiry coming tomorrow, so we'll have to wait and watch. But overall, the jury is in favor of the bulls, no doubt about it.
All right, jury is in favor of the bulls, and any pullback is a buying opportunity. Amar, so tell us, what are the buying opportunities in the market? What are going to be your picks?
I'd say both are from the infra space. The first one is Ambuja Cement. So this is one stock which is in for consolidation. So if you look at the weekly charts, we've seen the stock consolidate significantly, but we've seen it break above that zone, and the last few days we've seen some very good volume as well. So this is one stock one can look at with a stop loss of 569 and a target of 625 on the upside. because the structure of the stock has changed, and it's quite positive on the intermediate term as well as the short term.
For all those
And the
details.
second, yeah. And the second
You
stock,
give your
which
second,
I'd like,
give your second recommendation. Yeah, go ahead.
yeah. So that's from the steel space, and that's SAIL. So again, SAIL, what we've seen is that SAIL did rally significantly from almost 100 to 135 odd levels, and then corrected. And again, it's on an up move around 135, 137 level. So this is a second stock one can look at. Any pullback is a buying opportunity. The stop loss for this needs to be 127 with an upside target of 147 in the short term.
All right, SAIL and Ambuja Cement is the advice which is coming in from Amar Singh. Thank you so much for joining. With this, let's go across to Srishti, who is ready with the list of 2 technical checks with the stocks. Which are the stocks you have shortlisted today, Srishti?
Well, 2 counters, one on the breakout side and the other one on the breakdown side. Firstly, let's have a look at the breakout stock, and that is Ambuja Cement on the charts. What you can see is a very interesting setup for this particular counter, because every time the stock actually used to face resistance exactly at 580 odd levels and used to correct even rather from those levels. But in today's trading session, we have seen a strong move for Ambuja Cement happening. But the key to note is that for the past 7 to 8 days, the stock has been on the up move from close to 530 odd levels. The journey is close to 600 now. But for today, we have seen a bit of a breakout of that resistance zone happening. Apart from that, the stock is now trading above its 20-day moving average as well. And on the derivative side, we have seen a long build-up happening too. So that's the first stock on the breakout side. But the other stock is on the breakdown side, and REC on the charts. When you see, the stock has been under tremendous pressure for quite some time now. But what was interesting to see in today's trading session, the stock actually faced rejection exactly from its 20-day moving average. Other than that, it's at a 4-day low for itself and is once again retesting its crucial support level as well. So that's why we have selected this stock on the breakdown side. So these are the 2 stocks. Back to you.
All right, Srishti, thank you so much for joining us with the breakout and the breakdown counters. But let's move on to the word coming in from Wise. Mahesh Tandurkar, who's the head of research, and MD Jeffries shared his views on earnings growth going forward. He also adds that 12 to 14% earnings growth likely in FY27. Let's go across and listen in.
Earning trajectory we are looking at this year, FY26, is as of now the expectations are at around 10-11%. Next year is slightly better at 13-14%. But as we always know that this is the expectation as of now, right? And during the course of the year, there is a good chance that we see these expectations getting revised downwards. Also, the other factor that we will need to keep in mind is the nominal GDP growth. This year, FY26, the nominal GDP growth is likely to be in the range of around 9% or thereabouts. And that's because the real GDP growth is 6.5%, but then the inflationary environment is quite subdued, which is a good news for an average consumer. But when we look at what that implies in terms of the broader corporate revenue growth and corporate earnings growth, it means that those numbers are not going to look as strong. So most likely we would end up the year maybe at around 10% or maybe lower than that for this year, and about say 12-14% next year. If you were to look at outside of the banking sector, the multiples are in the range of 25-26 times on an average. So yeah, so that's what I mean when I talk about earnings growth versus valuation equation is not looking like the best.
Moving on, 2 stocks were in focus today, IndusInd Bank and SBI Cards. Goldman Sachs has initiated a downgrade call for both IndusInd Bank as well as SBI Cards. My colleague Snehi is joining with more details on this.
Well, yes. So 2 stocks that are trading in some pressure today, under some pressure, is IndusInd IndusInd Bank and SBI Cards is on the back of a Goldman Sachs negative note coming in for both of these stocks. So first up, let's understand Goldman Sachs' view on IndusInd Bank, because they have downgraded the stock to a sell rating from neutral but have hiked the target price to 722 from 634 rupees per share earlier. They say that the bank is likely to have a weaker growth profile going ahead, and on the back of this, they've also cut their EPS, which is earnings per share outlook, by 25% and 17% for FY26 and FY27 respectively. The cut is driven by loss of market share in key loan portfolios as well as deposits. They also say that revenue engines are slowing down and operational controls look challenging for the bank. They say that the bank has now become a structurally weak franchise, and ROA's return on asset is also set to be lower going ahead, and persistent margin pressures likely on weaker yield trajectory, which is elevating funding costs. So a whole slew of negatives that Goldman Sachs has pointed out for IndusInd Bank, which is why the stock is under pressure. Another stock under pressure is SBI Cards, and on the back of that, Goldman Sachs has downgraded the stock to neutral rating from buy. Target price has been maintained at 1006 rupees per share. They've also cut the EPS for this one by 9.5% and 7.8% for FY26 and FY27 respectively. They see positives already reflected in the price, but they're saying that they see sharp re-rating balances. It balances the risk reward going ahead. Credit costs and growth are going to be key focus areas in the near term. They believe growth will start accelerating in the second half of FY26 on improving ROAs, and loan growth may also see an uptick. EPS growth may be gradual due to slow loan conversion, muted leverage gains as well as higher credit costs. Increased credit cost assumptions. This is something that they have done, wherein they've increased the credit cost assumption for SBI Card by 50 bips each in FY26 and FY27 to 7.5% and 6.5%. So negative notes coming in from Goldman on both IndusInd Bank and SBI Cards. Both of these stocks under pressure as we speak.
All right, moving on then. It's been a largely decent May for Indian pharma players in the US. According to the IQVIA data, leaders like Sun Pharma, Dr. Reddy's, Lupin gained market share across the specialty and generic portfolios, with Zydus Life losing share in the key drugs. My colleague Sharad is joining in with the highlights of that report.
Well, a slight positive export data coming in for the pharma players, and do remember that the tariffs are expected to kick in, so majority of the Indian pharma players have actually boosted and sold their export sales going to US, especially in these markets, at the older rates as well, and that is over the last 2 to 3 odd months. The data which you are seeing are on an elevated position, of course a lower base. Sun Pharma, this is a positive reaction. Specialty segment has given a strong return, almost 17% year-on-year basis growth, supported by Lumia, out of which 50% of this contribution is coming from this segment. Within generics, if you look at it, the generic segment, there was a market share loss in the C products, that's the company's name, and from the peak of 21%, it's down to almost 9%. And G Pentasa, that is also, if you look at it from the peak levels, that has actually come down. But largely net the specialty contribution is higher, so it is positive. Dr. Reddy's, there has a fall in market share coming in the key generic products, Suboxone and Ciprodex to be actually precise, but now they have stabilized after flattish sales coming in, and now the market share in Gyprocel, that has increased to almost 10%. So overall net this is positive for Dr. Reddy's as well. Lupin, let's look at it. Spiriva, the market share that is stable at 32%, and Albuterol's market share that has declined by roughly 270 bips, and the sales has benefited actually from the launches coming of Predfonte. So net it is still positive if you look at on a consolidated basis, but Zydus Life Sciences, that's on the weaker side. My Biotric tablets market share that has been around 22 to 21 odd percent, but that's down roughly 10 to 11 bips, and the market share in Ortho Evra that has increased to 37 odd percent, but net it is on the negative side. Now let's look at the numbers, because we have discussed a lot of technical pharma products, but what are the easy numbers to actually remember? The sales changes, where the month-on-month changes has happened. Towards the negative side, we are having Zydus, Aurobindo Pharma and Biocon. These are the numbers month-on-month basis. While for Sun Pharma and DRL, there has been an increase of 13 and 19% respectively. But overall net the pharma exports to US, be it ex-Revlimid or including that drug, has been strong, and this is of course coming in because of the tariffs expected to kick in on July 9th.
All right, thanks Sharad for all those details. Now after pharma, let's shift focus to auto space. Nalini Kant Golagunta, CEO of Mahindra Automotive, talks about the factors driving decline in sales on month-on-month basis, and also discusses the company's outlook going forward. Let's listen in.
month to month is probably not the best way to do it for Q1. Seasonally, this is a weak month in June overall for the industry. So I'd rather do a year-on-year comparison with respect to last June, and we can do quarter-on-quarter with last year Q1 versus this year quarter. That's probably a better way to do. So overall, we have delivered about 47,306 SUVs for us, and that's about 18% growth year-on-year for the month. Yeah, we're well set for the festive season. As you know, in the last 12 months, we have had 4 major launches on the passenger vehicle side. We had 2 ICE launches, which is 3XO and Thar Roxx, and then we have had 2 very strong EV launches as well last quarter. So all these 4 put together, it's giving us the growth that we need. And the bedrock of the overall volumes, of course, comes from our traditional products, which is our XUV 700, Scorpio family is doing well, and Bolero now has started to pick up as well this year in rural. So we clearly see that bedrock doing well.
All right, let's move from the auto pack to the defense stocks then. It has been a stellar first half for the Indian defense stocks. So what's really fueling this rally, and will this momentum continue? Well, my colleague Kanishka is here to decode all of that for us. Over to you, Kanishka.
Well, India's defense sector has been on the offensive, at least in the stock market. In the first half of 2025, the Nifty India Defense Index surged over 36.5%, emerging as one of the best performing themes and giving a strong boost to the broader indices. The rally was led by Bharat Dynamics, which soared 76%, followed by BEL up 46%. Shipbuilding majors like GRSE and Mazagon Dock, they also clocked gains of 81% and 45% respectively during the first 6 months of 2025. Even Cochin Shipyard joined the rally with a 29% rise. Now, what drove this surge? It all started with rising geopolitical tensions, including India's Operation Sindoor along the Pakistan border, continued instability in the Middle East. Meanwhile, the centre has also set a record-high defence budget of 6.8 lakh crore for FY26, accounting for 13% of the total spending. And in fact, analysts expect another 10% jump in FY27 with more investment in drones, naval ships, aircraft and R&D. Add to that a wave of brokerage upgrades, a boom in defence exports and NATO's global push for higher military spending that's leading the sector to fire on all cylinders. And the second half, it's already off to a strong start. BEL opened H2 with a 2.7% gain, BDL added 2% and HAL that climbed nearly 1%, driving India's defence growth story for the second half of 2025.
Thanks, Kanishka, for all those details. Now, Rabinder is standing by with the list of stocks which remained in news and in action in today's trade. Rabinder, over to you.
Well, as Bharat Forge is in focus, where company has announced that the company has completed successful acquisition of the AM India Manufacturing Private Limited. Apart from this, MOIL is also in focus in today's trading session, where company says that the price of all ferrous grade of manganese ore with manganese content of Mn 44% and above has been increased by 2%, and the prices of all chemical grade have increased by 2%. Apart from this, Ola Electric is also in focus on back of block deal, where Ola Electric has 20.8 million shares changes in hand in 3 block deal today, and the stock was also trading the all-time low level. Apart from this, on back of brokerage note, Ambuja Cement is also in focus, where Nomama has come out with a note and they have maintained their buy rating with target price of ₹694. They say that the management expect capacity utilization of the industry to improve marginally. Apart from this, Tata Communication is also in focus on back of brokerage note, where Macquarie has come out with a note and they have given an outperform rating with target price of ₹2,300. Moving to next, tire stock is also focused in today's trading session. Balkrishna Industry, Apollo Tires and C8, all the stocks were buzzing in today's trading session, where the potential occurrence of the imminent India-US bilateral discussion may provide a boost to the tire stocks, and the Balkrishna derives 15.2% of its business revenue from the US in FY25. So back of all this reason, tire stock is also in buzzing in today's trading session.
All right, moving on, and before we wrap up this show, Snehi is joining us again to take us through the cues to watch out for tomorrow's trading session. Take it away, Snehi.
Well, yes, lots of cues to watch out for. It's the expiry trading session that's going to be the most important one to watch out for. Other than that, from the US, keep your eyes on non-farm payrolls, initial jobless claims, trade data, and remember the market will be closing early on account of the 4th of July Independence Day celebrations in the US. From Eurozone, expect to see HCOB services PMI. From China as well, we'll have the Kexin services PMI numbers come out, and from Japan, S&P Global Services PMI numbers will be out as well. But shifting focus back home in terms of corporate action and board meetings, it's going to be the last day to buy shares of a whole host of companies if you wish to be eligible for their dividend and wish to meet the record date. And these names include Tech Mahindra, Axis Bank, Bharat Forge, Biocon, Escorts, Naveen Fluorine, Nestle, M&M, Tech Mahindra. Lots of stocks are going to be in focus on the back of this. And it's also going to be the last day to buy shares of Concor, which is Container Corporation, to be eligible for their 1:4 bonus issue. In terms of AGMs, annual general meetings, keep your eye on Trent, Cyan, DLM and SRF. These stocks will be in focus on the back of their AGMs. And in terms of other events, expect to see some commentary coming in from ECB because they are going to be publishing their account of the June policy meeting. And Atlanta Fed President Raphael Bostic is going to speak. So some Fed commentary is also going to be key to watch. So keep your eye on all of these cues. All of them are going to be very crucial to track.
A lot of cues to watch out for tomorrow, but with this, we are completely out of time in this edition of Your Trades. Thanks for watching, but do keep watching ET Now.